edition of performance management. In today's class, we shall continue with our lecture on transfer pricing. Don't forget that if you go back to the previous the introduction to transfer pricing, you will see that there are three rules. Excuse me, there are three rules. The first rule is that when it is perfectly competitive, you use the market price. When there is a spare capacity, that is, a company has a spare capacity, that is, you use the variable cost. Then, when they don't have a spare capacity, they don't have enough capacity, that is when you will use the variable cost plus the contribution loss, which I've analyzed that in our previous lecture. Now, and that is the basis, right? Then, I mentioned something in transfer pricing then that always watch out for the company policy. You see, when you see that policy, look at it very well. That what is the company policy? Establish the company what policy first. Now, when you understand the company policy, you can now say, okay, yes, this is how it is, right? So, this is one of the compulsory questions of Ican. Let's see. So don't forget, the first thing you need to do is to read the required. Okay. Now, excuse me. Under the current transfer pricing system, prepare a profit statement showing the profit for each of the divisions. We don't know the current transfer pricing system. If they say current transfer pricing system, they will be talking about the policy. They will talk about the policy of the organization. Prepare a profit statement showing the profit for each of the divisions. Right? We need to show it. We need to show the profit of each of the divisions. And for Abimbola ENT as a whole. So once we show the profit of each division, we will also show the profit for the organization as a whole. Your sales and your cost figure should be split into external sales and interdivisional transfer where appropriate. Class, don't forget that if I transfer to, let's say we have selling and buying division, right? Selling and buying division. Division A is the selling division. Division B is the buying division, right? Now, if division A sell to division B, that is internal division transfer. That is internal sales. Right? That is what we call internal sales, and that will not affect the group because it is intergroup transaction. Right? So don't forget we have the selling division. We equally have the buying division. So next is head office is considering charging the transfer pricing policy to ensure maximization of company's profit without demotivating either of the divisional managers. Right? Lagos division, now they want to look at, okay, they want to change their transfer pricing policy. That's okay. Because they want to encourage the divisional managers. Right? They want to motivate them. Now, what is it? Lagos division will be given an autonomy to buy from external suppliers. To buy from the external suppliers, and Abeokuta divisions to supply external customers in priority to supplying to Lagos division. So we don't know which of these division is the selling division or is the buying division, but we know that the head office is given the what is called Lagos division an autonomy. You can go and buy your material outside without considering her priority, right? And Abeokuta too, without considering, Abeokuta too will also supply externally without considering any policy. Now calculate the maximum price, maximum profit that could be earned by Abimbola Enterprise if transfer pricing is optimized. Discuss discuss the issues of encouraging divisional managers to take decisions in the interest of the company as a whole, where transfer pricing is used. Provide recommendations of a company of a policy Abimbola Enterprise should adopt. Right? So this is one of the one of the what is it called? One of the compulsory questions of Ican. Okay. Abimbola Enterprise specializes Abimbola Enterprises specializes in the manufacturing and sale of inverter. And the sale of inverter, right? Each inverter consists of a main unit plus a setting of fittings. The company is split into two divisions. Class. There are two divisions. Lagos division and Abeokuta division. Lagos division now. Lagos divisions manufacture the inverter. Right? Lagos manufacture the inverter. While Abeokuta division manufacture the what? The fittings. Right? That we use. So you can see them. You can see that. Don't forget, at the beginning, we were told that each inverter consists of a main unit plus a setting of fitting. The inverter will contains fittings. Class. They manufacture inverter and sell inverter. And this inverter will consist of fittings. And they said Lagos will manufacture the inverter. Oh, now Abeokuta will now manufacture the fittings, which means that when they want to produce the inverter, Abeokuta will provide the components, the fittings that Lagos will use in manufacturing the inverter. Currently, all of Lagos divisions sales are made externally. Lagos sell externally. While Abeokuta division, however, sells to Lagos division as well as what? External. So this is to tell you that this is the selling division. Abeokuta. Do you know why? Because Lagos will manufacture the inverter. Without the fittings, the inverter may not may not exist. So Abeokuta division, however, will sell to Lagos and external. So Abeokuta is selling as a profit center, is selling to Lagos as well as external. Why Abeokuta is only selling currently all Lagos division sales external. Why Lagos is selling external only? It will buy from Abeokuta and sell external. Why Abeokuta is what? We sell to Lagos as well as what? External. Can you see it, class? So Abeokuta is the what? Is the selling division. Class, you need to analyze this question. You need to understand who want to manufacture. What are the components that they will use in manufacturing the product? Now, let me give an instance here. Adiola is producing maybe phone, right? And there are two divisions. Before they can be able to produce it, one division is producing the phone, the other division is supplying the components that you will use in producing the what? The phone, right? In this case now, You will see now that division that will give you the component is the selling division, because that is the division that will sell to you for you to be able to produce the phone. So we need to understand that first establish what is the sell, who is the selling division, then the buying division. After that, you quickly go and check what is the company policy. Then you work based on the company policy as well as the selling division and the buying division. Now, if we have established that Abeokuta will sell internally as well as externally, we can say Abeokuta is the selling division. Then Lagos, that we only sell outside, is the what? Is the buying division. Now, the following data is available for both divisions, right? For both divisions, external selling price, you can see Abeokuta is the selling division. Abeokuta will sell it. If Abeokuta want to sell the fittings, Abeokuta will sell it at the market price of 80 naira per unit. At what? This external sales, which means that when Abeokuta want to sell outside, Abeokuta will sell based on the market price. And what is the market price here? 8 naira. Right? The market price is what? 8 naira. That is the external selling what? Selling price for fittings. Now, price for sales to Lagos. You can see Abeokuta will now, because Abeokuta want to motivate the divisional manager. You can see that the price is below the market price of 80 naira. Abeokuta will sell to Lagos at 75 naira per unit. Why? Lagos will sell outside at 80 naira, because you want to do what? You want to motivate the divisional manager, right? You want to motivate the divisional manager. And for the purpose of what we call Go Congress, the organization as a whole, right? To maximize what? To maximize profits, right? To maximize profits. Materials that Abeokuta will use, right? Materials for fittings, 5 naira per unit, which is part of costs, right? Labor costs, annual fixed overhead. Now, let me now still explain something. I've explained it in the previous lecture, in our introduction. Now, you see, this price for sales to Lagos, this 75 naira per unit will become costs to the buying division, because the buying division, we expect it that, okay, I want to buy at the variable cost, which is 75 naira, right? Now, that price for sales to Lagos, it is what? It is a cost to the buying division. Why? It is a return, it is an income, it is a revenue to the what? To the selling division, right? It is what? An income to the what? To the selling division. So annual fixed overhead, maximum production and sales of fittings. So which means that Abeokuta have a maximum capacity to produce 200 units of fittings, while the for fitting, external demand is 180. Then the maximum annual internal demand is 80. So which means that external will take 180, internal will take 80, and you only have the capacity to produce 200 units. How will you allocate this? That is the question. Then who will settle this fight? It is the company policy. Simple. What is the company policy? Is it an opportunity cost, right? Or the other way around? you have 200 capacity, you have to supply external 180, internal 80. So which of the two will you supply first, right? If there is no policy, Abeokuta PLC will decide that if 80, if I supply 80 outside, I will make more profit than supplying 75 naira per unit, 75 naira, which is below the market price of 80 naira per unit, right? Now, let's check. Let's check for Lagos. This is Lagos division. This is Lagos division. What happened in Lagos division? Lagos division. Lagos division. Current selling price for inverter. Class, the current selling price for inverter 450. The current selling price means that the amount, the market price at which Lagos will sell external. Don't forget, Lagos will only sell external. We buy internal. That one that Lagos is buying internal, it becomes a cost to them. But the one that Lagos will now sell external, it becomes a revenue to them. Now, pricing of fittings from Abeokuta division, which means the cost from Abeokuta. If you check Abeokuta that we just check now, is 75 naira per unit. What is this cost means that? The cost that Lagos will use to buy from Abeokuta, which will becomes a cost to Lagos. And that is why you see it there. Other materials from external suppliers. Of course, Lagos will still need some other materials from external supplier. It will cost them 200 naira per unit. Labor cost, 45 naira per unit. Annual fixed cost, 7.4 million. Annual production and sales, they produce 80 and they sell 80 external for the market. Maximum annual demand in the market. You can see they produce 80 and they sell 80. Right? Now, what is the policy, class? What is the organization policy? The transfer price charged by Abeokuta division to Lagos division was negotiated some years ago between the previous divisional managers who have now been replaced by a new managers. Now, they are telling you that this 75 naira per unit that Lagos will buy from Abeokuta, it was negotiated. And it was what? It was negotiated, right? It was negotiated. Ideally, if it is not negotiated, Abeokuta PLC, Abeokuta division would have transferred it based on just the variable costs of producing that product. But it was negotiated, and it was even stated to us, it was stated, right, that it was negotiated before now, which is 75 naira per unit. Now, what is the policy? Head office allows Lagos to purchase its fittings from Abeokuta division. Can you see it? The policy from the head office is that go and buy from Abeokuta division. Go and buy from Abeokuta division. Buy from Abeokuta division. So which means that if Abeokuta decides that, oh, we have 200 capacity, oh, we need to give internal, right? We need to give internal 80 from 200. If you give 80, you have 120. So which means that the only unit you can sell to external is 120, not the 180, because there is no enough capacity, right? We would have switched to opportunity cost, but that is not the policy. I think the question says that use opportunity cost. You can now come and say, oh, the cost will be variable cost plus contribution loss. But the question did not talk about opportunity cost, so we will not bring in opportunity cost. So after this question, I have another question on opportunity cost, clearly stated in the question, class. So which means that it is compulsory, that it is mandatory that Lagos will buy from Abeokuta. Out of 200 units, we buy 80 units. So which means that Abeokuta will now sell 120 units outside at 80 naira per unit. At what? At 80 naira per unit, because that is the external what? External sales. Right? Now, if this is established, although the new manager of the Lagos believes he can obtain fittings of the same quality and appearance of 65 naira per set, which is per unit. Now, the new divisional manager now say, oh, I can get it lower, cheaper than the 75,000 units. You know, Lagos, Abeokuta is selling at 75,000 units, right? But the new manager believes that I can still get it lower than that now. Then, if he was given the autonomy to purchase from outside the company, Abeokuta division makes no cost savings from supplying internal to Lagos rather than selling external, right? That is it. If he was given the autonomy to purchase from outside, Abeokuta will not have any savings internally, but he will have more revenue externally, because Abeokuta will decide that, Abeokuta will decide that out of these 200 units, I will sell 180 to external at what? At 80 naira per unit, right? But we will not sell internal, because if there is autonomy, Lagos division can buy outside. Now, what is the required? Under the current transfer pricing system, prepare a profit statement showing the profit for each of the divisions, and for Abimbola ENT as a whole, your sales and your cost figure should be split into extra. So what is the policy here? The policy is that the office only allow Lagos division to purchase its fitting from Abeokuta division. That is the policy. You must buy it. So the remaining balance, Abeokuta PLC will now do what? We now sell to external after satisfying the internal, class. And that is the current policy. Class, am I communicating? I need to confirm that. Am I communicating?
Yes,
Yes,
sir.
yes.
Okay.
Yes.
Okay. Okay. Now, we work under the current transfer pricing policy or system. So we'll start A. Let's finish A first. A. Suggested solution. Please pay attention. Right? This is one of the compulsory questions. Suggested solution. What is the name of the company? Abimbola ENT, right? Abimbola ENT. Abimbola ENT. Right? Please, presentation matters a lot. See, I beg you, present your work very well, please. The name of the company, it is 1 mark, 1 mark. You get your 1 mark, 2 marks. Your nega sign, you get your 1 mark, 2 marks, and you move on, please. So we need to split it into 2 divisions. Abeokuta division, we need to split it like this. Abeokuta Abeokuta division, and Lagos. And this is my state, so Abeokuta division, and Lagos, right? They should have mentioned one side in Abeokuta now. So why did they just say Abeokuta? Lagos. So we can you can always get the recording version now. You can get it. If you want the recording, go just check the YouTube, check playlist, PM. Everything is there. Maybe after this class we'll upload this as well. So it's not a problem. Okay. Okay. So we need to have group, which is the company as a whole. Okay. What is the required? Statement of profits. Okay. Statement of profits. Statements of profits for the two divisions. All right. Statement of profits. Okay. Um, I should be arranged. Should I put it? Okay. Okay. Let's do this one. Presentation. Let's use this. Okay. Costs. Give me thousands. Let me check. Okay, sorry, I need to just arrange it the way to make sense. Make sense. Okay, I think we don't need these two. We don't need to. I think we don't need this. We just need something like this. Okay, class. So we classify it to internal and external sales. So now let's start from Abeokuta class. Let's start from Abeokuta. Abeokuta is selling to Lagos. Is that not so? It will become revenue. It becomes sales to Abeokuta because Abeokuta is a selling division. So you can have internal sales, right? Internal sales. So 75 at 75 naira per unit times how many units Abeokuta is selling to based on the policy. Can you see it? Abeokuta is selling at 80. You can screenshot this part, right? Abeokuta is selling at what? 80 naira. Abeokuta is selling at 75 naira per unit, right? And the policy is that Abeokuta must transfer to Lagos, and Lagos must buy the fittings from Abeokuta, and Lagos will need 80,000 units. 80,000 units. Then Abeokuta will now sell at 75 naira per unit class. So 80,000 units. So what do we have? When you multiply
That's 6 million naira.
6 million, right? So this will be new. Now, this will not affect the group because Yoruba will say, no, don't let me speak that. But it just like uh, uh This will not affect the groups because it is internal. You are not making any profit. Are you making any profit? If you sell, if you sell goods to me now, we exchange. I give you this, you give me this, right? So there is no any effect. There will not be any effect on the group. So it will not affect the group, right? It will not affect the what? The group. So therefore, we will not have anything here as this, right? So now the next thing is Abeokuta will sell to external, right? Abeokuta will sell to what? To external. So external sales. Now let's do small calculation here. Workings, right? So capacity, maximum capacity for Abeokuta, 200 units, right? Maximum capacity. Then it is compulsory that it must sell to internal. That is the policy. Lagos must buy. That is the policy. So internal demand 80 units. Let me show you in case you. This is internal demand. Can you see it? Internal demand. That is why you see 80 units here. And Lagos, we have 80 units because we buy from Lagos 80 units and sell 80 units to external, right? Now, Lagos is using one trick here. Hmm, okay, I'm coming. So what is the difference?
120.
120 to be transfer to external. So this will be external 120. Lagos will buy at 75. Interesting. I don't know if you are seeing what I'm seeing. Interesting. I'm coming. Let me show you. Uh, transfer pricing is actually interesting, right? You can see. Can you see something? Lagos we buy at 75 naira per unit from Abeokuta. Lagos will now sell at 450 naira per unit. Class. Can you see that? It's interesting because why Abeokuta can sell 80 outside? You are selling at 450. So multiple, you make a multiple gain, right? You make more profit. There is nothing. There is nothing you can tell me. Lagos will make more profit than Abeokuta, despite the fact buying from the selling division. But let's see. Let's see. Right? Let's see. Now, external sales. So this is the external. Okay. Abeokuta will sell to external at what? At 80. Can you see it? At 80. External selling price 80 naira per unit. 80 naira per unit times external. So that is what's left, right? 120. Can only sell 120 to external. So what do you have? Figure.
9,600,000.
Okay.
Yes.
Okay. So this will affect the group. You make a sales. So you have 9,600,000. Any intergroup transaction will not show in the group, will not actually affect the group because you are not actually making money. If you sell to me internally, it's still in-house. But if you sell outside, yes, that is where you say, yes, you are making what? You are making more what? Revenue. So that is why you have to put it here, right? So the next thing is internal sales. Ah, sorry, external sales. You know, Lagos will sell external, right? External sales. So at what price Lagos will sell external? Lagos will sell external. Let's check. At 450, right? Class, are we still together? At what, class? 450, right?
450. Yes, sir.
At 450. Okay. At 450, and we sell the 080 that was purchased from what? From Abeokuta. So 450 times 80. So what do you have? Yeah, Esther, what do you have? Figure
36
36 million.
million.
36 million. So we have it here as 36 million. So this is your sales, right? This is your sales. Okay. Total sales. You can say this is A. So when you add these sales together, what do you have? 6 million plus 9.6. What do you have quickly? Hello, what do you have quickly? Hello, class figure.
50, 50,600,000
Naira.
Okay, that's fine. So this is 36 million. So if you add this together, this should give you 9.6 plus 36 million. What do you have?
100. 45,
What?
600.
45,600, right? So please, you can mute your mic. 45,600. So now, of course, in the process of you are making a sales internal, you are making a sales external. Of course, you will incur costs. Is that not so? You will definitely incur costs. So now let's start. Variable variable cost. So let's check. Let's check for the variable costs of Abeokuta first. Then we come back to fittings. We come back to Lagos. So material, right? Material. Of course, when for them to produce 50, 200 units, they need material, and the material cost is 5 naira per unit. Please take notes. You can screenshot this. I will ask you. Then labor costs. Of course, for them to produce 200 units, labor will be involved. So we pay them 15 naira per what? Per unit. Right, class? So 15 material and labor. Material. So how much are you paying the first one for material? Material. Abeokuta. Please screenshot this thing now, please, so that we can move quickly.
5 naira, 5 naira.
5 naira per unit.
Okay. 5 naira per unit times the 200 units that you want to produce. So what do you have for Abeokuta? What do you have?
1 million.
1 million.
1 million. So labor
15 naira per unit.
15 naira per unit. Thank you. And they want to produce 200 units. So what do you have?
3 million.
You say
3 million.
2 million.
3 million. 3.
3 million. $3 million. Okay. We move again. Let's check the material for Lagos. Material for Lagos. Okay. Can you see the material? 200 for them to annual production and sales 80 units. Is that not so? So they actually need the material for the production, and they will need labor. Please take note, 245, right? 245. Okay. 200 times 80,000 units. So what do you have? Figure.
60 million.
Okay, I'm coming. Okay. 15 million.
16. Oh, 16.
Oh, thank you. 16 million. All right. So what of the labor? How much is the labor cost? How much is the labor cost? You did not screenshot, okay. Labor cost is 45 naira per unit, right? Can you see it? Everybody, can you see it? 45 naira what? 45 naira per what? 45 naira per unit. Oh, the call will end in 3 minutes. Wow. 45 minutes, 45 naira per unit. 45. Quickly, let's fix this so that we can. So what do you have? Figure
3.6 million.
3.6. So we add this cost together. Here you can have 17 million. Who is that? The person should unmute your mic. This is
Sir,
yeah.
so you mentioned that if the buying division is the buying division is buying from the selling division, it will recognize the
At cost. I will recognize it. Thank you. I guess. Yeah. You know the internal sales. Yes, thank you so much. Very good. I will recognize it immediately after material labor. I will now say, please don't forget that in internal cost, or you say internal sales. You can just put internal sales. If Abeokuta is selling to Lagos, it will become a revenue to Abeokuta. It will become a cost to Lagos. So let me quickly create another link so we can continue. Thank you. So please give me the figure when you add. This is 6.6 million, right? This is 6.6 million, right?
Yes, sir.
So please, so that you will not forget, always bring in the cost first. Internal sales. Always bring in the cost so that you will not forget. Please, always bring in the cost. So you can see that you sell to internal at this, so it will become a cost because Abeokuta will recognize this as revenue and it will become a cost. It will become a cost to Lagos, right? It will become a cost to what? To Lagos. So what is the cost? 6 million. Please always bring in that first so that we don't forget. This is very important, please. Please always bring in that internal sales, so that it will become a cost. It will become a cost to the buying division, right? It will become a cost to the buying division, while revenue to the what? To the selling division. Class, am I communicating? Am I communicating, please? So it is
Yes.
always
Yes,
good
sir.
for you to bring it forward, right? So that you will not forget to bring it in. Now, if this is established, right? What else do we have? What else do we have? Do we have any? We have fixed costs, right? We have fixed costs. Okay, I'm coming. We have fixed costs. Fixed costs. Okay, please take note of what is the fixed cost for this 7,044,000. This is the fixed cost 7,044,000. Then what is the fixed cost for this? The fixed cost of this is 4,400,000, right? Please take notes. So we can have fixed costs for Abeokuta. What is the fixed cost for the Abeokuta? Fixed cost. What is the fixed cost?
4,400,000.
4,000,000, 4,400,000. I can see less. Then what of for Lagos? What of for Lagos? What do you have for Lagos? 7,440,000. Can you see it? Hello, can you see it?
So I can
Yes, sir.
confirm
You
that
say?
Abeokuta. Yes. Can you
What do you
confirm the
say?
fixed cost like
Yeah, I've confirmed.
for for
It's
4 million?
4,440. Yeah. 7,440,000. So let's call this internal transfer, right? Let's say transfer sales. Okay. So it will not affect the group, just like the other one. Okay. So this is 7,440,000. 7,440,000. Right? So when you add the fixed cost together, what do you have?
11,840,000.
11,840,000. 11,840,000. That's all about the costs. So Okay, let's just say total sales. Total sales. Okay, please help me to remove. Let's get our profits. That's all now. Let's get profits. What's the profits? I need to get the profits. Remove your revenue from your costs. What is the profit? Someone should give me figure. Oh.
7.2 million for Abeokuta.
7.2 million. Then what is this out of this?
$2,960,000.
2 million.
960,000.
Okay, 2,960,000. 2,960,000. Out of the group,
10,160,000.
10 million.
160,000.
Okay, 10,160,000. 10,160,000. Oh, okay, okay. So what is the next one? I think. Okay, okay. Let's check. The policy is not on any of the amount that goes to purchase. Okay, okay, okay. That's fine. Okay. Class, this is the A part, right, of this question. I need to confirm if you really understand this. Question, do you understand?
Oh, I'm speaking for myself. I understand.
That's a very good one. Okay, now we need to continue. We need to just, sincerely, I've not even solved this question. That is just it. And guess what? All the questions I used to bring to this class, I don't solve it before I enter class. But, but I know it's correct, actually, so there's no point. There's no point. There's no point. I can check back later. So let's move on. Let's move on. Let's move. This thing is, I don't even know where the solution is. I just have the questions. I don't know the solution. I don't know where it is. But that's fine. So the B part of this
Yeah,
question,
I can question. We can do it for you. Can set question.
okay, yes, it is.
Okay.
Yes, it is. Yes, it's actually an icon pass question. But if you see the solution, no problem, you can. But for me, I don't have it. I don't have it. But I believe it. What we did in this class is 1,001 correct, right? Because it is only based on policy, right? It is based on policy, and that is what I do in performance management. I just understand policy principle, right? Okay, So under the second, head office is considering charging the transfer pricing policy to ensure maximization of company profits without demotivating either of the divisional managers. Lagos division will be given autonomy to buy from external suppliers. So which means that Lagos can buy from external. It is not, the policy now has changed. It is not the usual that you must buy, right? It is not the usual that you must buy. So they can actually get it outside, right? They can actually get it outside. Now, to buy from external supply and Abeokuta's division to supply external customers in priority to supply to Lagos division. So you can see now, Lagos can buy outside. Then Abeokuta can decide that I want to supply out of 200, I will supply 80. Class, I will supply 180. I will supply 180 to I will supply 180 to what is it called? I will supply 180 to external. Then the remaining one, I will now supply to what? To Lagos. But Lagos can go outside and do what? And buy. They can go outside and what? And buy. It is their choice, right? Now, calculate the maximum profit that could be earned by Abimbola Enterprise if transfer pricing is optimized. Class, the division, this thing now has changed. Lagos division will be given autonomy. So now Lagos can go outside to buy. And don't forget, it was mentioned that although the new manager Lagos division believed that it can obtain the fitting of the same quality at what? 650. So which means that Lagos can go and buy 650 per unit. That's 80 units. That 80 units that's supposed to be that Lagos supposed to buy internally, right? Can go outside and do what? And buy it at what? At 65 naira what? At 65 naira per what? Per unit. Why Abeokuta can supply the whole 180 to the external, because the external need 180, can supply it at what? At the price stated here, which is 80, right? And that is what it means. Then we need to restructure our calculation, right? We need to restructure our calculation. So who is that? The person should unmute his mic and use our mic and ask questions. So this is
That's a
B.
question.
So what
So
is it? Okay.
if Abeokuta sells the entire 180 to the external buyers, what will happen to the remaining 20? Are we still selling?
No, to who? It's
Can't-
180 that it's 180. No, okay. Are we still selling that 20 to internal?
No, we can't.
We can't, because internal Lagos can go outside and buy the same
All.
quality as all.
Okay.
You get, so the remaining 200, I don't know how Abeokuta want to do. Maybe I don't know what they will use it for. I don't know. Do you get?
Okay, sir.
Ican can actually twist that question again. That they will now twist it that, oh, Lagos can only buy 70. They can see Lagos can only buy 70 outside. Or Lagos can only buy 60 outside. You see that remaining 20 that Abeokuta did not sell, then they will not tell you to add it again so that you have 80. Class, am I communicating? See, you should always prepare for the worst, like the worst case scenario. I can decide to tell you that, you see that, okay, since Lagos will give 180, Abeokuta will give 180, so Abeokuta will have 20,000 units. So what will now happen to it? Now the question will now twist is that Lagos should buy just 60 outside, so that the remaining 20 will not waste. We buy 60 outside and 20 internal. So that you have 60 plus what? 20. You have what? 80. Then you can now, Abeokuta will sell is 180. Are we together? So it can be like that, sha. So in this case, we have to restructure our table, right? Statement of profits or loss. So I can copy this. There is no external sales. There is no internal sales. Let me just copy this and I can adjust. Okay. You can mute your mic if that's there is no internal sales. You can mute your mic, please. Hello. Okay, I thought someone wants to. Okay. Adekoya.
No, I'm not saying anything. When I heard someone once, so I wanted to check if I was not the one raising my hand.
Okay. That's fine. That's fine. So in this case now, class, Abeokuta, we only sell to external. We only sell one. How much to external sell? How much did external need? 180 to external. Because the policy now change. Now they can sell to external. Is that not so? Before giving priority to Lagos. And Lagos can decide that you can buy the same fittings. You can buy the same fittings at 65 naira. So in this case now, we give external the 180. Is that not so? You give external the 180, right? Now, okay, when you multiply, what do you have? If you multiply this, what do you have? Multiply you. What do you have?
44,400,000.
34 million
No,
for
44. Sorry, 14 million. Sorry, 14,400,000.
400,000.
Mm.
So external sales will still remain. Lagos can still sell the 180. Is that not so, class? Are we still together?
Yes, sir.
Check. Okay. So, but the question is, what will now happen to the 20,000? But they didn't tell us anything about the remaining 20,000. They said, although the new manager of Lagos believes he can obtain fittings of the same quality and appearance of 65 if he was given the autonomy. So he's purchasing everything. So let's move on. So head office is considering to change the transfer pricing to ensure maximization of company profit without demotivating either of the two divisions. Lagos division will be given autonomy to buy from external. So that is the autonomy. Can give you go and buy outside. See, go and buy outside. So that's fine. So we move ahead. If you do not understand, let me know. Wait, let me finish first. So I'll quickly copy this again. Right? Mind you, there is no internal sales again because we have to sell. There's no internal sales, but there is external suppliers. Lagos will buy it externally at 65 naira. External supply. So Lagos. Now let me show you the external supply in case. Where is it? Okay, can you see it? Although the new manager of Lagos division believes he can obtain the fittings of the same quality at 65 naira per set. They didn't even give us the numbers of sales, but we know his units they are talking about, right? His units. That is 65 naira. So that is the external supply. So which means that I can get it outside at 65, right? The same fittings. So we can have 65. Coming. Let me check something. This is the next question, right? So, what is the transfer pricing? Okay. I think this is the opportunity cost I'm looking for. Okay, that's fine. That's fine. Abuja, that's fine. Sorry, I'm trying to check something here. Okay, this is how many units this one is trying to purchase. Okay, that is it. So, okay, sorry, just needed to confirm the next question. Okay, so this is 80,000 units. We get it outside 80,000 from the external suppliers. So when you multiply, what do you have? If you multiply, what do you have?
5.2 million. 5.2 million.
5.2 million. So this will affect the group because it's external, not an internal. Right? So what else? Everything. Okay, let's change. I'm coming. Now, Abeokuta now. Abeokuta. Now, let's check now. Class. Which of these costs now? Abeokuta have the maximum capacity to produce 200 units. Is that not so? Now, are we still using the 200 units here? Are we still using the 200 units, class? Hello?
No, we are not using 200,000 units because we are only
Okay,
supplying 180,000 units.
180,000 units. Okay. I'm sorry. 480. Sorry, please. Okay, it's 480. Okay, let's quickly go back. Okay. Oh, okay, sir. Yeah, more one class me. Yeah. Hello, Zoom. Go ahead. Okay, sir. Yeah, thanks. Sorry, please. I needed to fix class for professional. Okay, who is that? Okay. Now it's 180, right? Because they have the maximum capacity to produce 200 units, but the demand is 180. So definitely they have to produce based on their what demand. If not, the remaining 10,000 units we just waste. Is that not so? So in this case, we can have 180 because that is the material that we use to produce it, right? Then we have 180 here. So these figures will change. So 180 times 5, I'm coming. Those two are really coming. 180 times 5, what do you have? 180 times 5, what do you have? Quickly.
900,000.
900,000. Next. 15 times 180, what do you have?
Million 700,000.
You say?
2,700,000.
2,700,000. Okay. Then the total, this total will change as well. The
So
total will change.
you have not been changing the total. That's what I wanted to tell you. The total
Okay.
Abeokuta is 14,400,000.
Okay.
Then
Which side? This
the
side?
Abeokuta sales, total sales for Abeokuta, you have not affected
Okay.
14
Thank
million.
you.
Then the group sale, the group total is
Okay.
50,400,000.
50,400,000. Okay. That's fine. Thank you. So let's change this. If you add 16 plus 900, what do you have? Don't forget that this is like a variable cost of production, right? And that is, they demand 180. They have the maximum capacity to produce 200. But the only demand is 180. Then if they want to produce, are they going to produce the whole 200 units? Or rather than saying that, okay, we need to produce based on the demand, right? That is why we decide to use 180,000 units, not the whole, because not because they have the whole capacity to produce 200. You now go and multiply by 5 and you say everything, right? So what do you have here? 16 plus 900, what do you have?
16,900,000.
16,900,000. So yeah, what is the total?
6,300,000.
6,300,000. Okay, so let's change the profits. Let's change the profits. Figure.
For Abeokuta, 6
Okay.
million 400,000.
6 million. 6 million. Hello. Hello. 6 million what?
400,000.
6
400,000.
million. Okay. Okay. Lagos now. Who is giving me figure? Just one person, right? Why now?
3,760,000.
3 million, 3,760,000. Next. Wait, just one person. Okay. Oh,
So the profit is still the same, 10,160,000.
okay, 10,160,000. Okay, that's fine. That's fine. Okay. Please, if you have question, unmute your mic. If you have question based on this B part that we just did now, unmute your mic. That means we are good now.
I just want to know why profit is the same as before. Is it because
Yeah.
we didn't sell all the capacity or like the maximum capacity?
Yes, they didn't sell the whole capacity. And they can even make more money outside as well. So
Oh,
that thing has actually covered it. That is why we have to make even because they can, what happen is that uh if they say external, they make more money. Just like Lagos now. Lagos sell external and make money. Okay, let's say Abeokuta now. Abeokuta sell externally and make more money than selling internally. Is that not so? But guess what? The profit are different. Look at it. This is 6 million and this is 2 million. Can you see it? Can you see it? So which means that if Lagos buy outside, the profit will be 3,760,000. And if they did not buy outside, the profit will be what? 2,960,000. Now, if Abeokuta sell, make a sales to Lagos, make a sales to what is it called? Make a sales to Lagos. Is that not so? So the profit will be 7,200,000. But if you decide that, oh, you don't want to sell, you don't want to sell to Lagos, right? You don't want to sell to Lagos, you want to sell externally, right? The profit will reduce, right? Because of the capacity. You know, you're supposed to sell the whole 200, but because the demand is just 180. Do you understand?
yes, sir.
Okay, that's fine. Next, uh, I think we are done with this question, right?
I think it's
Uh,
the last part. Just see.
okay. Please, I hope we understand this question though. See, this is the first, just the first question. Oh. We still have like, because I need to solve at least three questions. Three questions. Then after that three questions, I expect you to like at least solve other questions as well. Okay, the last part. So calculate this B part says that calculate the maximum profit that could be earned by if transfer pricing is what is optimized, right? And you confirm that it is still the same, despite the fact that they still give them the autonomy, they still have the same transfer, they still have the same what is it called? They have the same the whole group profit still remain the same. Now the C part of this question, who can try? Someone should just assist us with the B part. Quickly, I'm waiting, please. Hello, Chai. Class, are we still together? How now? Discuss the issues of encouraging. How can you encourage divisional managers to take decisions in the interest of the company as a whole? Discuss the issues of encouraging divisional managers to take decision in the interest. Now, this thing is that it is very simple like this. If you said we give you the autonomy, right? So go outside, go outside and buy the fittings, buy the material. But you are exposing the company, you are exposing the business to, let's say, to more competitive, to be more competitive. Do you know why? Because in the process of meeting these suppliers, another suppliers may come that, come, what did these people need? Oh, they need this thing. Oh, so this is how they used to produce this inverter. Okay. Before you know, they will start producing inverter. Then you now ask yourself, how? Who gave them this idea? Right? So it is always better for an organization when to set a transfer price, you should be fair, right? The selling division should be fair with what the buying division, setting its transfer price below the what? Below the market price, right? Now, and they say to take decision in the interest of the company as a whole, because you should not always be like, okay, you should not always be your own profit alone. You should also look at the company profit as a whole, right? What will be the what? What will be the effect as well? Why transfer pricing is used? Provide the recommendation of the policy Abimbola should adopt. Now, the policy that the Abimbola should adopt, when you look at it very well, if they are talking about the whole company, if they buy internal, the profit still remain the same, right? If it is external, the profit still remain the same. But the question is, does it encourage the divisional managers? Now, for you to encourage the divisional managers, you need to like advise this buying division to buy from outside, right? That is autonomy, right? And you can see that it is 65 naira. Why the selling division is selling at 75 naira, right? Now, which of these will you now recommend? Because if the selling division decide not to transfer internally, the profit will reduce, right? But if the buying division decide that, they decide that, okay, they can get it outside, which is the head office instruction that they autonomy go and buy outside. The buying division profit will actually what? Will actually increase than the selling division. Now, what is now the recommendation now? You could recommend that, well, if the product is not competitive enough, you can advise that they can the transfer price that they should give the autonomy, more autonomy to the buying division to buy outside, right? In order to encourage the divisional managers, right? And don't forget, they say discuss the issues of encouraging division. What are the issues? You are trying to encourage divisional managers, but guess what? What are the issues? There may be a conflict of interest between the two divisions. These are the issues they are talking about. Class, I want you to, when you see a question, attack it the way it is. Don't assume that you don't know. You must write something, right? You must do what? You must write something. So therefore, discuss the issue. You are trying to encourage the divisional manager to take the decision in the interest of the company. Where transfer price is what is used. What are the issues? Right? Conflict of interest may arise. Right? There may be a lot of probably maybe division preferential treatment, maybe probably division A, which is the selling division, knows one of the, what is it called, the top officials. Before you know, they will use preferential treatment. Is that not so? And say, oh, our division B, say, okay, division B, go and buy outside because he knows someone inside. Do you get? So if the product, recommendation of the product, so if the product is not competitive, well, in order to encourage, the divisional manager can actually buy outside. But then, in order to be at par, not to discourage the selling division as well, right? It is advisable that the selling division should always sell below the market price that will encourage the buying division. And that is all about that. So, distinguished professional colleagues, I think I have to go now, right? This is all about the first question under the transfer pricing. I hope I've been able to communicate very well. Class, are we good? Unmute your mic. Class, okay, Adekoya, go ahead.
Just one question before you go. So this
Okay.
part that we just solved, this question we just solved, which policy does it fall under? Or
Yes.
full
Now there are two policy. Don't forget there are two policy. The first policy, let me show you. They say under the current transfer pricing system. The first one, what is the transfer pricing system policy? Head office only allow Lagos to purchase its fittings from Abeokuta division. That is the current policy. That is what? It is the current policy. You must buy. Then, the second policy, that is B part of this question. Head office is considering changing the transfer pricing policy to ensure maximization of company's profit without demotivating either of the divisional managers. Lagos, they now say, oh, Lagos should buy outside. Then Abeokuta should sell externally. Calculate the maximum price, maximum profit that could be earned by Abimbola Enterprise if transfer price is what is optimized. Adekoya, are we still together? So
Yes.
you can see the profit. Although the group profit remains the same, but the profit of the divisions change, right? Because when Lagos decide that we want to buy internal, the profit will have 2,960, while the profit of this is 7,200,000 because of that 200 units. Now, whereby they decide that, okay, this is how we want to share it now. The profit of Lagos increases, while the what? Abeokuta decreases. Right? Is that also? So, and that is what we have here. Okay, Obafemi, Rachel.
Good afternoon, sir.
Good afternoon.
Yes, sir. You spoke about perfectly competitive market and when we have surplus and also opportunity cost. My question is, how do we identify that the market is perfectly competitive?
It will be clearly stated. That is why I said, okay, now let me show you. And even that opportunity cost, now let me show you one question here. That is why I say I want to take it one after the other. This one is based on the price given to us. Now, in some questions, that is why I say we need to solve like at least 3 to 4 questions in transfer pricing. Now, in some questions, now in this question that we just finished, right? They gave us the price at which you will use to transfer in that internal division. Is that not so? Given to us. In some question, you will not be given to us. It will not be given. They will tell you that it is based on variable cost. But you will now say, what are the variable costs from this question? So which means that the selling division variable cost, that you will use the variable cost of the selling division to do what? To do the transfer pricing. Right? To do the what? To do the transfer pricing. It is your network. To do the what? To do the transfer pricing. Now, let's quickly look at this question now. Now, in the policy, Transfer pricing policy. Transfer prices are set at opportunity costs. Can you see it? Transfer price are set at opportunity cost. A. Assuming that division A buy all the components it requires from division IC. Produce a profit statement for each this. Can you see it? And it is based on opportunity costs. Do you get? Do you understand now?
Yes, sir. Thank you very much.
Thank you. So are we good, class? We are good, right? We are good. Can we? Okay. Are we good? Good. All right. All right. All right. So this is just one question out of uh Tuesday, Friday, and Sunday. So we have to solve just four questions, right? And this is one. We'll solve the other one. That is two. I think immediately that's two. Then some other questions as well, right? So please, I need someone to just, if you can assist me, I need all transfer pricing questions, maybe past questions in Word. I need them. I just need just the questions alone, so that I have three already. I think I have three already. I still need like six. So if I have the six, I'll solve four out of it. The remaining two is for you, right? Don't forget, transfer pricing is decision making, and it could be your compulsory question. Nobody knows, right? Relevant costing, right? Decision making, make or buy decision, discontinued operation, linear programming, throughput accounting, variance analysis, right? These are decision making and transfer pricing. These are decision making questions, which takes about 30% of the syllabus. There is no diet. Ican will not test decision making as compulsory question. That is just it. So, anyways, thank you so much everyone for joining. So, since there is no question, we are good to go, right? We are good to go. So, thank you so much for joining. Don't forget, stay away from those who have negative energy. This is the time you need to study. This is the time you need to you need to check our YouTube. This is the time you need to solve more questions. This is the time you need to do more past questions, right? Go and check. Most of our questions, some of them, I added ACCA to it, and I can pass question. Everything is there. So please, I need someone that will do me that favor. Should just send all the transfer pricing in Word. Just send it to me. I can just pick the most difficult. I like to solve most difficult questions, right? Like what we did in SFM yesterday. It was very difficult. Everybody knows that one. Yes, I like to solve questions. So bring it, then send it to me. I will make use of it, right? So thank you so much. If you need any assistance, just send message to the platform, right? I will definitely attend to it. Just send message to the platform. I will definitely attend to it, right? So you don't need much. All you need to do is that understand the principle of performance management, your presentations, your NERA sign, your workings. Make sure everything look neat, right? And don't forget principle. You talk about throughput accounting. What is the principle behind throughput accounting? It's only recognize material as variable cost. You move on. After that, you talk about throughput accounting ratio. What is the formula? Return per factory hour divided by the conversion per bottleneck or per available hours. You talk about that. Okay, when throughput accounting is greater than 1, what is the implication? When it is less than 1, what is the implication? You move ahead. To the limiting factor. What is the principle of limiting factor? Right? Contribution per limiting factor. Contribution per limiting factor. You rank from ranking your production from production to profit. Right? When you talk about shadow price, increase in limiting factor, one of the scarce resources, increase the scarce resources by 1 unit, right? Compare your old contribution with the new contribution as a result of increasing the scarce resources by 1. We give you what we call shadow price. Is that also under the linear programming? Check the approach we use in solving linear programming. There is also a shadow price as well, right? So these are the things you need to know in performance management. You don't need to cram no. Just understand principle. Understand the principle that guides all those topics. So once you understand it, believe me, you are good to go. You are good to go. So thank you so much, everyone, for joining, and enjoy the rest of your have a wonderful week ahead. Thank you.
Thank you, sir. Thank you so much.
Thank you. Thank you, everyone.
Thank you, sir.